The Canadian real estate bubble is looking very similar to the one in the 1990s, and we've got a yield curve that is as inverted as then. So we should really take this at face value, which is that the yield curve is consistently accurate when it comes to predicting these things. So let's get into it, first of all, with a video which comes from the mid-1990s. So this was put on Twitter by Economic Woes. He put some good stuff out there, but this is interesting. So listen to this.
New figures out tonight show last month was the slowest month for house construction in 13 years. The CBC's Neil MacDonald now on the slump that just won't end.
It would be hard to imagine better conditions for buying a home. Prices in most parts of Canada have been falling steadily since the late 1980s. There are plenty of homes from which to choose, and mortgages are cheap.
Feeling hopeful.
So, what does the spokesman for Canada's home builders have to say about the year that just ended?
It was the lowest level of activity since the Second World War. We're now going into 1996, and we have no reason to believe that it will be any better in 1996.
So it's very interesting what he said, and I want to go straight into this, which sounds, very, very similar, doesn't it? And you've also now got inventory that is exploding, not in just Toronto, but in Vancouver as well, which is Canada's biggest real estate bubbles, Toronto and Vancouver. So let's get into this. So Greater Toronto real estate prices ripped higher, sort of. Greater Toronto real estate prices made a big jump last month. The benchmark price climbed a whopping 1.3% to 1.128 million in April. However, annual growth was at 0.97%, minus 11,000, lower than the same month last year. Yes, prices remain lower, even with a giant monthly increase. And guys, remember, that's nominal prices. So you're not taking into account inflation. And I would urge people to take it into account, because this is the 1980s CPI and it's shadow stats, and it's based on the US CPI, but it's very, very similar here in Canada. So you've got the CPI-U, which is this red line, and then you've got the shadow stats 1980s based CPI, which is this blue line. So if we were back in the 1980s, we would have had an inflation print of nearly 20%, you know, up around 17%. So essentially, if you take these numbers and you compound those numbers, you are talking about inflation of between 30 to 50% over the past 4 years, guys. That's not a joke. So people who are saying there hasn't been a real estate crash are just completely insane, because when you look at inflation, prices are absolutely plummeting in real terms, because you've still got some markets that are down near 20%, some over 20%. And think about it, guys. If you've got inflation of 30%, which I think anybody on this channel would say is a low number for the past 4 years compounded, then essentially you're looking at a real decline of over 50%, meaning in layman's terms that if somebody sold that house in 2019 and then they sold that house in 2024, what they could buy with the proceeds of the sale of that house is much, much less, 30 to 50% less than they could in 2019. So you have to factor that in. That's why nominal prices are not really a good gauge. Yes, they're showing you where the market's moving, and I think it's good for that. But if you're actually looking at what's happened for prices, and you're actually looking at net purchasing power, which is the most important things, at the end of the day, we buy things with that money. It is important to look at real inflation adjusted prices. So hopefully that makes sense. So Toronto real estate prices, you can see they've kind of zigzagged, and now it's going to be very interesting to see what happens, because if you look at what's happening with sales and inventory, you can kind of predict what's coming next. Toronto home sales amongst the weakest on record surge in sellers. Rising prices were certainly not due to a surge of competing buyers. TREB reported just 7,114 home sales in April, a decline of 5% from the year before, excluding 2020. Last month marked the slowest April for sales in at least a decade. It follows the slowest March for sales in over a decade as well. So remember, when everybody on Twitter, all these real estate agents were coming out in January, February saying, oh my God, the spring rush is here, guys. You better get in. You better get in. And what's happened is just completely flopped, exactly like my buddy John Flynn talked about and we talked about on this channel. And I'm sure I can't wait to do the next update with him for Q2. So that'll be really interesting. So the drop in sales certainly wasn't due to a lack of choice either. New listings surged 47.2% higher to 16,941 homes for the month. This pushes the sales to new listings ratio, SNLR, to 41% on the border of a buyer's market where prices are expected to fall. And then you can see on this chart what's going on. So this is home sales, and 2024, 7,114 compared to last year's 7,487. And if you're going back to 2022, 7,900, and 2021, 8,000. And in the accumulation phase of this bubble, you saw over 12,000 sales. So just think about that. So you've got 7,000 home sales, right? And you've got 16,000 homes coming onto the market, nearly 17,000. So obviously, you've got almost double the amount of homes coming on the market than you have sales. What's that going to do to prices? I don't think you have to be a rocket scientist to figure that out. And we're going to get onto the rents, which is just compressing valuations even more. So first of all, I want to get onto this tweet from Table Salt, again, another person that put some great stuff on Twitter. So Vancouver suddenly enters a buyer market as listings explode unexpectedly. So again, you're seeing Vancouver new listings absolutely explode. And look at it compared to resales, just the difference there. It's only really a couple of these markets, Calgary, Edmonton, Montreal, where things actually remain relatively okay. And even valuations are being compressed there by what's going on with rents. So this is really interesting, guys, what's going on with rents. So basically, this is for Vancouver. And unfortunately, Door Insight, for some reason, it's only 1 year. I wish they would make it more than a year. But you can see 1, 2 bed, 3 bed, and you can see that rents are lower compared to last year. So you're seeing rents of $3,500 compared to last year around $4,200. So think about that, because interest rates haven't gone down, the costs of home ownership haven't decreased, but rents are starting to go down because rents, guess what? They're correlated to people's incomes. They can deviate a little bit. I've said this before. They deviated in the 2008 financial crisis as well, but eventually they're going to have to come back. They cannot go up indefinitely if people do not have the income to pay their rent, unless everybody starts paying rent on credit cards, which could happen, who knows. But anyway, when you look at what's going on, it's not just a case of Vancouver. So if we go over to Victoria, you can see that Victoria, BC, rents are down slightly. So if you look at Edmonton here, you can say that rents are pretty flat, but down slightly since last year. If you look at Calgary, you can see rents starting to go down there, although pretty flat again, but they're starting to ease. At the higher end, like I said, you've still got rents going up at the low end, but they were undervalued before all this bubble behavior started. So then also, let's take a look at Halifax, see what's going on there. Halifax, you've also got rents that are going up slightly. It looks like in a trend there. And then you've also got this going on, which comes from the northern account. So Canadian real estate companies going bankrupt at an extreme rate, new data suggests. There were 23 corporate bankruptcies in this sector in March 2024 alone, an increase of 142.9% from March 2023's print of 7. And then it talks about real estate transactions. And you know, we just played that video from the 1990s, and now you've got them talking about exactly the same dynamic that is going on there. So it's very, very interesting. And you can see here from this chart what's going on in Toronto, by the way. So you've got active listings that are up year over year, 74.4%. Meanwhile, sales are down. Just think about that. So inventory up 74%. So this is really crazy when you think about what's happening. And again, this is also happening in Vancouver. It's happening with the biggest bubbles, and we would expect that it would, of course, start there. So very interesting what's going on. We'll continue to monitor the data that comes out for this. So if you've enjoyed this video, I would highly recommend that you watch this video, which is about how the banks are fudging the number when it comes to defaults. And if you're looking for a VPN, go to expressvpn.com/marketmania. I'll see you in the next one. Take care, guys. Bye-bye.